Hello everyone, this is Katie Anagnostos, and this is a trade planning with options video for May 15th, 2023. First, our legal disclaimer: the options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow these trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the Ask Slim website or email matt@askslim.com. Let's get started. Let's first start with AMD, Advanced Micro Devices in the semiconductor space. This is the weekly chart. Notice that the weekly cycle timing window, which is the period of time between these blue vertical dashed lines when we expect an intermediate low to form, that period of time ended last week, and we appear to be 2 weeks off the intermediate low. Now, this symbol is found on the cycle low timing tracker in the bottom pending category for the weekly time frame. And for those of you who use the new market conditions monitor, this is showing a bullish setup for the short-term time frame, and that time frame uses the weekly, daily, and 2-hour charts. Switching over to the daily chart of AMD, you'll notice that we got a nice move up off that low. This daily low is the one that corresponds with the intermediate low from the weekly chart. We also got an improvement in momentum shortly thereafter, with both the reversal scout and slim ribbon now turning green. We tagged this prior cycle peak right here and now retracing down towards that support zone. This retracement is roughly corresponding with the declining phase of this out of phase cycle. So what this looks like is a potential bull flag forming. We would expect this support zone to hold and then turn up again, targeting that 102 level up here. Now the support zone runs from 92.71 on the top to 88.25 on the bottom, and the next daily cycle timing window runs from June 7th to June 15th. Let's switch over to TastyTrade. I have AMD loaded in here, and although the IV rank is low at 8.3, the implied volatilities in these cycles are in the 40s. So that means we can look at short premium strategies and see if we're able to collect enough credit. I'm going to use the June 9th weekly expiration cycle because it aligns with the next daily cycle timing window, and also because it has $1 wide strikes compared to the monthly expiration cycle, which has only $5 wide strikes. Now, remember the levels that we talked about: 88.25, the bottom of that support zone that we would expect to hold, and then the target up at the 102 level. So with positive momentum and moving out of the intermediate timing window, we could get higher than that. So what I'm going to look at is a jade lizard in here, because a jade lizard will have no upside risk if we do get a move that's higher than that target level. So a jade lizard is the sale of an out of the money call spread and an out of the money put. To set it up properly, we need to collect a credit that is greater than the width of our call spread. That's what gives us no upside risk. So let's place our short strike at the 102 call, and let's do a $2 wide spread. Why $2 wide? Well, because we want to cover the bottom of our support zone with our short put. And to do that, we'll need to sell a put that's somewhere here in this 88 to 90 range. So you can see that the credits for those puts are $1 and change up to about $1.50. So if we were to sell a $5 wide spread, let's say, on the call side, we would not be able to collect a large enough credit to set this up properly and cover the width of that call spread. So the 102, 104 short call spread plus this short 90 put gives us a credit collected of $2.08. Let's go and take a look at this on the risk graph. Notice that between our short strikes of 90 and 102, we have our max profit zone. Max profit is 208, which is our credit collected. Also notice that above our call spread, we have no risk to the upside, although our profit does go down by the width of the call spread, since that spread would be at max loss. Now, since the width of our call spread in this case is $2, that means that the profit potential up here is only $8. If you want that zone to have a larger profit potential, then you could make your spread narrower. If I move this down to the 102, 103 call spread, now our spread is only $1 wide. We only need to cover $1. We're collecting 184, 183, somewhere in there. And that means that above the target of 102, our profit potential in this area is $83. So a $2 wide spread gives us a greater profit potential in the max profit zone between our strikes where we're targeting, but it does give us a much smaller profit potential up here above that. So some of you may also be wondering why we would do this type of a strategy versus just selling, let's say, the 90 put. Well, you're collecting a greater credit, so your profit potential is a little bit higher if we stay in this zone. And also because of that greater credit, your downside break-even point is better. In this case, it's $87.94, which is just below that, that support zone on the daily chart. So now let's take a quick look at the other elements of this trade idea. Obviously, it's a bullish trade. You have 17.62 long deltas, and you pick up just $6.73 approximately in daily theta. Max profit is 206. Max loss is $8,794, which is if AMD goes to zero, which is very unlikely. Now, this trade uses a 1,400 and change in buying power to place. You have a probability of profit that's very high, up at 79%. So our initial profit target is 50% of max profit. So we're looking for just over $100 per jade lizard in here. If this were to go against us, that means that our short call spread is at max profit. So we would close that part of this out for a winner, and then we'd be left with this naked put that we would roll. Now, if you are interested in the TastyTrade platform, which is our preferred options trading platform, please go to the Ask Slim homepage. You can click on the Marketing Partners tab and the TastyTrade link in there. If you open an account with them through our link on this page, that will help you with some bonuses, and it will also help us, so please do consider checking that out. Next up is going to be a trade idea in Boeing. Here is the weekly chart of Boeing. You can see that we formed an intermediate low here in between these weekly cycle timing lines, and this has just been going sideways with the reversal scout switching back and forth between positive, and currently negative again. Over on the daily chart, we formed a daily cycle low on May 4th. This was a very flat cycle that basically ended where it began. We then moved up to this 38.2% fib level. The cycle low timing tracker shows this as bottom confirmed for the daily cycle, but as you can see, this is not looking positive. We currently have a negative reversal scout and a negative slim ribbon. The market conditions monitor is showing neutral for the short-term trading period using the weekly, daily, and 2-hour charts. So with a flat cycle like this under negative momentum conditions, we would not expect Boeing to make a new high in this daily cycle. We have a 78.6% fib up here at 213, which would be a conservative upside. For a downside level, we can go back over to that weekly chart, and there's a 38.2% fib level right around the 180 level. Now let's switch back over to TastyTrade. So Boeing is showing up similar to AMD in terms of volatility with decent implied volatility here in the 30s, low 30s, and a low IV rank. This one is 6.6. So that combination means that the volatilities have been much higher over the past year. Now let's go into the June 16th monthly expiration. And with the sideways price action, we're going to do an iron condor. With negative momentum, let's skew it slightly to the downside. Using the levels I just mentioned, but with $5 wide strikes in this expiration cycle, let's sell the 215 call and the 180 put. We're waiting for the data to load in here. So the sale of the 215 out of the money call and the 180 out of the money put, this setup right here is a strangle. It uses just over $2,800 of buying power. If you're comfortable with that, then that's your trade. If you want to define your risk and use less buying power, then we'll do the iron condor. Now you can make this as wide or narrow as you want, although if you make it wider than $25 on each spread, you'll be using more capital than just doing the strangle. So I'm going to do a $10 wide, so 180, 170 put spread, 215, 225 call spread. We collect a credit of $2.36. 236, that's our max profit. Our max loss is the difference between the width of the spread and the credit collected, in this case $764. Our probability of profit is 69%. We skewed this somewhat to the downside in light of the negative momentum conditions, so our deltas come in at just over 8 short deltas, and we pick up a daily theta of $5.80. Let's go and take a look at the risk graph. As you can see, we want Boeing to stay in between our short strikes at 180 and 215, and for time to just tick away. A vol contraction would also help. Our profit target is 50% of max profit, so we're looking for just about $120 per iron condor out of this. If it goes against us, management would be rolling the untested side closer to at the money and possibly further out in time. Another symbol that is similar to this is FedEx, FDX. Here's the weekly chart. We're about halfway through this weekly cycle and momentum has turned negative. Our low isn't due until mid-July to mid-August timeframe. Now over on the daily chart, we are approximately mid-cycle here as well and testing that cycle low support. Both our reversal scout and our slim ribbon are negative. The market conditions monitor is showing bearish for the short-term time period, and we do have a daily cycle timing window coming up at the beginning of June. Now, as far as levels, we have rejected from approximately the 61.8% fib at about 230. And we have the 78.6% fib above that at 232.79. Now over on TastyTrade, we have a different volatility situation. In this case, the IV rank is slightly higher and the implied volatilities in the expiration cycles are somewhat lower. So let's go into the expiration cycle that most closely matches our daily cycle timing window. That would be the June 9th expiration cycle. And let's see if we can collect enough credit on just a straight up short call spread since we have negative momentum and testing that cycle low support. Our 61.8% fib is at the 230 level, so let's sell that 230 call. Again, you can make your spread as narrow or wide as you want. I'm going to do a $10 wide again, so buying that 240 call. That gives us a credit collected of $1.92, and that is also our max profit. Max loss is the difference between the width of the spread and the credit collected. In this case, that's 808. So if you take your short call strike and you add the credit collected, that will give you a break even of 231.92, and that is up near that 78.6% fib level. Probability of profit in here is 73%. We have just over 20 short deltas and a daily theta of $4.61. Now, if this trade were to go against us, what we would do, management could include adding on a short put spread and or rolling out in time if we could do that for a credit. However, earnings are coming up in FedEx, so we would probably just take our loss and move on if this did move against us and up through those 78.6% fib levels. So here's the risk graph. You'll notice no risk to the downside. That's a short call spread. We want FedEx to stay below our short strike. So initial profit target, again, 50% of max profit. So we are looking for anywhere from $90 to $100 per short call spread out of this trade. So that is trade planning with options for May 15th. You can see the details of these trade ideas on the options trade idea tracker. And as always, please feel free to reach out on Discord or via email to Katie@askslim.com if you have any questions or feedback.